A very good morning to one and all. Always aim at perfection, for only then will you achieve excellence. Welcome to the second day of our international webinar on Survive to Thrive Reimagining Corporate Strategy. Today's session is Financial Strategies of Public Sectors. We are made for goodness, we are made for love, we are made for togetherness. We shall grow the flowers of gratitude in the soil of prayer. Prayer should be the key in the morning and a lock at night. Let us begin our second day of international webinar with spending a few minutes in silence. Before going to the session, I would like to point out the feedback link will be shared at the end of the session only. Finance Minister Nirmala Sitharaman recently announced that public sector undertakings companies will stay only in strategic sector. The public sector organizations should be familiar with the internal and external factors that affect their business. Striking a balance between these factors in the main prerequisite for building a successful business model in the current conditions of rapid change and increased competition. It has become challenging for most public sector undertakings to keep their financial wheels turning during the lockdown period due to less revenue churn and the general uncertainty in the global financial environment. Monitoring of financial management in the public sector is important not only for affecting directly in the efficient and economic use of public funds, but it significantly affects in the establishment of a sustainable culture in the better use of public funds. Today, as we are having the session on financial strategies of public sectors, a smile is the universal welcome. There are people who come into our lives as welcome as a cool breeze in summer and last about as long. I am glad to invite Dr. T. Suganya, Assistant Professor of our PG and Research Department of Commerce, to give the welcome address.
Good morning, everybody. Seek His will in all you do, and He will show you which path to take. We can make our plans, but the Lord determines our steps. Yes, of course. The Almighty determines our steps. So we step up to our second day of international webinar is going to organize by PG Department of Commerce, Idhaya College for Women, Kumbakonam. Leadership is not about a title or designation. It's about three I's such as impact, influence, and inspiration. These three I's act for our respected principal, Reverend Sister Dr. Eugene Amala. I welcome you, Sister. I would like to extend a special welcome to our college secretary, vice principal, and administrator. With their blessings, we proceed this webinar. What do you think you become? What do you feel you attract? What do you imagine you create? In these golden lines are suitable for our chief guest, CMA CS.SABAPATHI, Deputy Manager in Finance, Coal India Limited, Kolkata. I give you a small intro about of our chief guest. He has distinction in BCom, MCom, and MPhil. He has secured All India rank holder in ICWA course. He has qualified a company secretary with a single attempt. He has imparting professional knowledge to needy students from rural areas through the free education and financially assisted the students, those who are in economically weak. Previously, he was the head of the Department of Management Studies, Chettinadu College of Engineering and Technology, Karur. The strength for his successful career is that his positive thinking. Currently, SAR is taking up the challenging assignments like proposal evaluation, financial concurrence, internal control, capital expenditure, etc. Welcome you, sir. Winning is something, but participation is everything. Yes, really. A warm welcome to my fellow mates from various colleges and Idhaya family, research scholars and other participants, those who give the continuous support for us. Welcome you all. Last but not the least, my favored welcome goes to the rising stars of the beloved students. Once again, welcome you one and all. Now, the session will be carried with sparkling and powerful words, and over to our chief guest.
Thank you, Sukanya Madam, for your words. Respected Principal of the College, Idhaya College of Women, the Head of the Department, Department of Commerce, Dr. Mahalakshmi Madam, the faculties from various colleges who are participating in this webinar, and students. Good morning. So this is very, very crucial moment. So we people are sitting in our houses and watching online because this is the abnormality. This is the abnormal situation. So we could not predict a year before or 4 months before. Last 4 months, what is happening? What is happened to all the industries in India? How economic slowdown happening in India? How there is medium, small, micro enterprises are facing such a problems in even remitting the salary to the staff also. They are facing so many there is problems nowadays because of this COVID-19 pandemic. All of us simply sitting in the home and always thinking of there is news. What are the news today? Every day we are watching the TV. What are the cases? How many cases? We are always thinking about that. So I request all of you, please think positively. Everything will be all right within a couple of months. Okay. I hope all you are safe. Okay. So today the topic given to me is, so since I am working in the public sector, so I have some the experiences. Today I am going to share some experiences with respect to the strategies. That is the financial strategies, because I am from finance. I have done that is commerce. I have done CWA, the cost and ops accountants. I'm a company secretary. So that is why I'm just sharing my knowledge. I'm sharing my knowledge. So what is the business strategy all about? What is corporate strategy all about? And very importantly, I am going to talk about the financial strategy. Okay. So let me share my screen. So I have prepared some clips. So please wait for a while. So I'm just sharing my screen. Okay. I think my there is a presentation is visible to you. I hope so. If anyone say yes, yes, the financial strategies. Okay. When we talk about the strategy, the another thing is coming, planning and strategy. What is strategy and what is planning? The people are always thinking the planning and strategies all are same. Some people may think both are different. So today we are going to that is talk only about the financial strategy. What is strategy is all about? The planning, everyone knows the certain things, the what is supposed to do, how to do this type of planning. Okay, you say 5-year plan. But when we talk about the strategy, what path, the route you are taking, that is the way you are going to achieve that plan. That is what we call it as strategies. Okay, in the corporate, so we have the business strategies. Under the umbrella of business strategy, there comes the functional strategies. Every department in the public sector companies, they have their own strategy in achieving the target, right? So every department, say for in your college also, every department, you have your own targets. You have your own strategy. You will teaching also the faculties, they know their planning lecture plans are okay. How their lecture will be ultimately reaching to the student, that is their own strategy. Okay. this is what we are going to talk about. Today, I take this, sorry, how? Yes, PSUs. Okay, I'm going to talk about the strategies in public sector, right? The many people, they don't know what is the public company and the public sector enterprises. Public company is different and public sector is different. Okay, please do understand. Public company is different and public sector company is different. Public sector, the ownership is belongs to, that is the government. Please do understand. So public company, they can have some the privileges of issuing shares and so many things. It is equal in public sector, and so they are following the board meetings. They are also following same criteria. But the ownership is vested with, please, the ownership is vested with the government. That is, whether it is state PUC, it is vested with the state government. If it is a central government, it is vested with this one, right? So then comes, why public sector? If we are giving the essential services to the private sector, what will happen? Shall we expect the public welfare from the private players? No. That is why the central government, they keep, see, they keep all their, that is, this is a service motive. This is the service motive towards the nation. They are giving there is essential services to the nation. So say, for example, petrol industry, oil and gas industries, the food corporation of industries, the railways, there is insurance corporations. The main strategic sectors are with the public enterprises, right? Then another big thing comes, public accountability. So the public enterprises are accountable and responsible for whom? So for the public, because why? The public money, the public sector is dealing with the government money. Government money means, so this is the tax amount of the public. So the public money is invested in these enterprises. That is, every public enterprises is accountable and responsible for this result, for this public, right? Then comes control. The full control is, the full control is vested with the there is the government. The government hands over all the, there is a control to the offices. It may be a CEO of the company. It may be there is a managing director of the company. He may be the directors of the company. He may be the principal secretary to a particular ministry. So many things, but the full control, the ownership and control and management is vested with the state or central government. This is why we call it as public sector. Why public sector? Because the management is in hands of the government. How? They are having the 51% of the total shareholding. So I'm having the shares of ONGC Limited or BPCL Limited. Yes, you may have, but the majority of the shares is held by, please do understand, the majority of the shares, more than 51% is held by the government. That is why we are called them as the public sector companies, right? Then comes, what are the objectives of the PUC? Economic objectives, social objectives, and political objectives. These public sector undertakings, these public enterprises have been set up because of this economic development. By setting up, there is a key and basic industries of every, so irrespective of a particular industry, the government go with all the industries. So if it is private player, they are always the profit motive minded, they are money minded. So they go for only where there is a profit, so they go there. But in government takes all there is steps for developing the economy across all the regions. That is the planned growth. It is not a single day growth. So after it is gradually it will be growing. That is the ultimate aim of the government. So in each and every industry, whether it is a sick industry, there is a backward industry, whatever may be the thing, then comes the balanced, the regional development. The government, they should not show the discrimination among the regions to, that is, avoid the regional disparities. So such a way the public enterprises has been made across the country, right? Then comes the generation of surplus. If any generation, if any surplus is generated, any cash flows are generated from this, but this business, it will be used for, there is a government social, there is welfare purpose. Okay. Then providing the employment, that is a big objective. Why? These public enterprises have been established in India only because the government should give the employment for the people. To avoid the unemployment of these people, they are creating the opportunity among the people, then giving the right salary also. That is why they have providing the employment. Then comes the social, then controlling the monopoly. If it is in the hands of the private players, they dominate the entire market. They will not give any. There are so many problems are there. That is why for avoiding the domination on the private players, they do have the control over the monopoly. See here, the transmissions, the power sector, the oil sector, the coal sector, the food sector. In these strategic sectors, government is having the monopoly. They don't want to give it to the private players. If the private players comes, so the people cannot afford to buy these in such a reasonable cost. So equal distribution to all, the provision of yes, it's control monopoly, the equitable distribution of wealth, the provision of essential goods, because for all the people, these companies are providing the reasonable rates. They are giving such essential goods like oil, petroleum, everything, and service. They are entering the services also. Food Corporation of India, FCI, is looking after the food needs of India, right? They take over the sick units. So very the public sector, they won't think about the profit. Simply, that is why they are having take over the sick units. Why they are having the sick units? Why, you people may ask. So this is a sick unit. There is no profit at all, sir. How can you run the sick units? You may ask. So the government thinks some other way, right? If you close the sick units in different industries, across industries, but the PSUs are not, that is considering as, because the results in number of employees, they will lose their jobs, right? So public interest, national defense, these are the small introduction I'm giving. National defense, all the defense oriented manufacture of arms, manufacture of ammunitions, manufacture of all, there is a telecommunication, all, everything is vested with what? The government only, that is PSU only, right? So this is a short description about the public sector company. Let us go to the next area, right? What is that? Right, the strategies. Okay, while talking about the strategies is always connected with the top level management, right? Top level management. So you have studied I think you become students and become students. You are very aware what is the lower level management, what is the middle level management and top level management. Okay, the sketching is being done at lower level, but the decision making, when you talk about the decision making, ultimately, please listen, ultimately, all the decision making is done at top level management, right? So strategies is always related and connected with what? The top level management, right? Who are all in the top level management? across all sections. Who are all in the top level management? See, you may be aware, these are the persons, the chief executive officer, we call it as CEO, the managing director, the whole-time director, a chief financial officer, manager, company secretary. These are the persons, what we call it as key managerial persons. What they actually do, they take actions. They take actions. They are fully responsible. Please, they are fully responsible for shareholders. Okay, if anything happens in the whether the value of the firm will decrease or increase, all there is only the key managerial personnel are highly responsible. They are solely responsible for these changes, right? So who, what companies they should have this? That is a key managerial personnel. Any company, any listed company or any public company having the paid up capital of 10 crores, please do listen, make a note of it. If company is having the paid up capital of 10 crores or more, they should have these persons as the key managerial personnel, right? So what they are doing, the decision making is being taken, decision making is being held with these professionals. They are very, very knowledgeable person. So see, you may ask questions, sir, company secretary or CFO, chief financial officer, or CEO, the chief executive officer, are they the board of directors, sir? No, there is no need at all.
Sir? Hello, sir? Sir?
Sabapathy sir? Sir? Sabapathy sir?
Can you hear me, madam?
Sabapathy sir? Sir, now only
Yes.
we can
Okay.
hear, sir.
Thank
Okay,
you.
go ahead, sir. Okay.
Yes, we talk about the board of directors, right? So with respect to the public sector company, here the board of directors is the sole responsible for all the shareholders, vested with the board of directors only. They do have the powers to delegate and take. Hello, I think I'm audible. Anyone, please? So there is a
Yes, sir. Audible, sir. Sir, yes, sir. Audible.
Yes, ma'am. With respect to the public sector company, the board of directors are solely responsible for any decisions. Okay. So why I'm talking about the board of directors here in public sector companies, any decision, any financial decision, or it may be the production strategies or anything, for any decision is being taken at board level only. They do have the board meeting, they do have the presentation, they do have the technical subcommittees, technical committee, they do there is present their views, their opinions. Finally they come to the conclusion. It is a very big, very lengthy procedure is being followed here in public sector. It is not as easy as you think in private sector. Private sector, you are putting your own money, right? Even a day, even a single day, or within a week, or within a month, you can take a decision because it is your money, right? But here, the board of directors, who appointed the board of directors? The board of directors is appointed by the President of India. Please note of it. All the directors of the company is appointed by the President of India. Please do note of it, right? So the board of directors, as per the expertism, as per the expert knowledge, so junior officer or senior officer, they can appoint the key managerial person. Understand? The board of directors, they appoint the key managerial personnel, right? So all the CEOs, all the CFOs, or all the company secretary need not be a board of directors. Okay, the board of directors only, they do appoint these key managerial personnel, right? Right. So come to our topic. Today is a very important topic we are discussing about, right? The financial strategy, right? Financial strategies. So see, if you are going to, I'm asking you all people, if you are going to invest, you are going to, for example, you are going to purchase a flat or purchase a land. So what are the things, the precautionary measures you are taking? You analyze. So very big money, 10 to 20 lakhs or 50 lakhs, you are going within a single day, you are going to put the very big amount in a particular thing. So before that, you might have done so many analysis, right? So financial strategies always start with, there is so many, there is opinions, there is discussions, the committees. We in public sector understanding, before we go for the proposals evaluated by many grounds, whether it is a viable project, whether it is a feasible project, whether it will be taken up, whether it is a good for the public or not. Here the public is very important. The social impact on the strategy, if I am taking the strategy, it is against the public, so it is not viable. Even it is a very economically viable, whether it is a profitable investment, in that case also the government will not do that, because social impact, they are seeing the social impact also, right? Come to the very important financial strategies here. So in corporate strategies and functional strategies, it comes the financial strategy, right? Three major the research strategies we are going to follow. First one, what is the opportunity where you are going to put your money, right? The second one, okay, now it is okay, there is allocation of the capital where you're going to commit the fund. You commit the fund. First, you have to decide. That is a very big decision in any company, even a government also, where they're going to invest. That is the very big thing. In personal life also, where you are going to invest, that is the very big deal, right? Then comes from where you are going to raise the funds. What should be the mix? Whether it should be the bank loan, whether it should be the equity financing, what type of the capital. In private, you have your own capital, you may get the capital from your friends, relatives, etc. But here in public sector, they have only two options. Either they go for that is equity financing, another case they have to go for the borrowed capital, right? The third important decisions, one you have, that is raise the profit out of the generation of there is business. You will raise the profit. How you are going to distribute, because the public sector is not profit oriented. All the profit, it is belongs to the owners. Who are all the owners? The shareholders and the government, right? The owners, the shareholders are the owners of the company, right? Please keep it in mind. Then comes, right? So investment, okay? Investments always connected with the risks. Okay, there are so many things we have to. It is a it is the lifeblood of every business. It is the most important strategy in any business, whether it is a private startup. I'm talking about the public sector. Even also, I'm talking about the private also. Whether you take any startup, for startup also you need, that is a very good decision where to invest. what opportunity is there in that, whether it is feasible to invest or not. These things, it should be very clear, right? Then comes, see, there are two types of that is investments. All commerce students, you all aware of this. One is long-term investments, another one is short-term investments, right? So I have purchased a plant and machinery. I have purchased a big equipment. So without the support of electricity and manpower and all, I cannot even run the machine. The machine will be idle. So for that, we have to go for investing in the short term also. What we call it as working capital. Without working capital, so you cannot run the business. So it is a support, it is the auxiliary to the long term. So what are the occasions? What are the occasions you go for this one, right? Long term. Friends, now I want to clear what is, that is capital budgeting. What asset you have to, that is purchase, in what project you supposed to invest. So this is what, so you become students, MCOM students, so MBA or BBA, so these students are aware of this capital budgeting because they do have this in the curriculum. I hope so. All the students, you do have the capital budgeting from the management accounting, I think so, in that subject. It is very clearly you might have studied, right? Again, I'm telling, this is very, very big decision, the capital budgeting, the capital expenditure decision. While I talk about the capital expenditure, I have to talk about the revenue expenditure also. What is revenue expenditure and what is capital expenditure? The capital expenditure, sorry for the interruption. The capital expenditure is nothing but the benefit out of that expenditure will last for so many years. That is why we call it as the capital expenditure decision. The next one is short term, that is revenue. What is revenue? In that you are paying the salary to your employees. In that month itself, the benefits you are received. That's it. It is over. It is, everything is over, right? So it is very clear. So now you are clear that what is there is a capital expenditure, what is a revenue expenditure. Capital expenditure is always dealing with, so whatever the capital expenditure, it will be taken into the balance sheet. If it is a revenue expenditure, all revenue expenditure is being taken to the, that is income statement, what we call it as profit and loss account. Please, my dear friends, please do understand, the capital expenditure is always, we are talking about the assets only, assets, right? So in public sector undertakings, what are the possible long-term investments we are making? When we think about the expansion of the business, or acquisition of any other business, or you are renovating, or you are modernizing your own business, it is a part and parcel of the asset only. That is why, so the proper, that is analysis has to be made before. We are in the mining sector. I am in Coal India Limited. Sir, there are, for obtaining, there is approval of a mining for a particular mine, we have taken so many, that is analysis. From the costing to implementation of the project, it takes nearly about 5-6 years. It is very lengthy process because it involves public money. So the proposal has to be made, it has to be vetted by different departments. So whether expansion will give, that is positive impact on the future cash flows, whether acquisition will not, that is hamper the shareholders value. So there are so many aspects we have to think while we are determining the long-term investments. It is not as easy as you think, that is directly we go and take. There are so many processes out there. It is not as easy, right? What are the investment process? How we look for the opportunities applicable. What is actually required at this point of time. What is required at this point of time? Then we decide, so this equipment has to be purchased. For example, whether it is we go for the automated machine, or there is a machine, there is a man handled machine. Once it is decided, we go for automated machine. That is, we decide the investment option. We go for there is automated machine. Then what are all the different machines having the same specification? I need this capacity. Is it available in the market? I have to check. See, I have to check. Then I have to do analysis. There are different, if you purchase a small thing also, you go and you watch, there are so many things are having the same characters. If you there is purchase a mobile, for purchasing a mobile, you people, what we are doing here, so what we are doing, we do analysis, whether the camera, the quality is there, all the features are there, whatever there is looking for. So we are doing various analysis, okay, analyze the investment alternatives. We identify the investment alternatives and we do analysis, then evaluate which one will be suitable for your requirement. Please do understand, you have to evaluate which investment alternatives are suitable for you, right? Then finally, we have to select after analyzing, after so many meetings, after discussion, after so many committee discussions, finally we have to choose the investment alternative, right? So why the high priority is given for investment decision? So in the government also, this is the question, why the high priority, we are giving much weightage, why the much weightage is given for? Very, I'm giving only one answer, because this is public money. That is why before deploying the money on a particular project or particular, that is a project, whether it may be a turnkey project, it may be infrastructure projects are taking nearly 4 or 5, 6 years, 7 years, or projects are there. After that only you can expect the cash flows from that. Infrastructure projects is always, they will generate revenue after completion of the project, after 6 years, 7 years, or 8 years, or 10 years. After that only you can think of there is generation of revenue, right? So growth in the long run, we have to think about the growth. Why whether this investment will yield, whether this investment or this asset will yield for a long period or not, that has to be considered, right? Then it affects the risk of the firm. If the decision is wrong, if the investment decision is wrong, the shareholders' value will come down. There is a high impact on the shares in the market. There are so many risky factors are there. Another big thing, commitment of very large amount of funds. It is not a revenue expenditure. Please keep it in my funds. Capital expenditure, always there is a huge amount of the funds is being involved, right? So if you are spending 100 rupees, you are thinking, if you are spending 10,000 crores or 20,000 crores in a particular project or particular mine, so there are so many projects, because of very small factors, they have dropped. It happens in India. The final stage, it has been reached the final stage, but that has become dropped because the commitment of funds is very huge, right? And another big important thing is, it is irreversible. Once you put the money, if it is gone, and you can yield. So the investment decisions are irreversible. Please keep it in mind, my dear friends. It is irreversible. Once you put on a particular project or particular, there is a scheme, it is over. It is not reversible, right? Then comes how to choose the best alternative I think the students are very, very aware of these things because I'm just recollecting my memories 10 years or 12 years back. I have been studying in this, the NPV, IRR, the profitability index, payback period, discounted payback. So these are the methods, right? So mostly in public sectors, what we are following the IRR technique. What is net present value? Please do understand, I'm just investing 10,000 rupees today. So after 1 year, if I'm expecting the return of there is a 10%, okay, 10% return I'm expecting. For example, I'm expecting 10% return, right? So my expectation is 10%. I am putting 10,000 rupees. After 1 year, if I get 11,000 rupees, yes, I got the return. Okay. If I get there is 12,000 rupees, it is more than that the return what I am expected. So what is net present value? While we talking about the net present value, we have to talk simultaneously the time value of money. What is time value of money? At the cost of capital, we have to discount. After 1 year, you will get there is 12,000 rupees. What is the value of that money today? We have discount on the cost of capital. Now another question comes, what is cost of capital? This is the cost you require to earn from your business. Okay, the two things. So you have borrowed a loan from the bank, 1 lakh rupees. The interest you supposed to pay is 10%, that is 10,000 rupees you have to pay. Okay, you put on the one investment. The investment is giving, that is only 8% return, but you are borrowing 10%, but your investment is giving only 8%. Is it feasible? Is it viable? No. So the expected return, please keep it in, my dear friends, please keep it in mind. IRR is always more than, IRR means, for this is the accounting terminology, we are using internal rate of return. But for common terminology, you can take it as the expected return should be more than your liability. What we call it as cost of capital. If I earn 15 rupees, then only I can pay 12 rupees to you. The 3 rupees I can have, that is written. I will keep it with myself. Please do understand. If I earn 100 rupees, I will pay, that is 8%, that is 80 rupees to the bank, and 20 rupees I will keep. It is fair. If I earn only 80 rupees, I supposed to pay the interest to the bank for 100 rupees, whether it is feasible. No. So very clear, my dear friends, while studying this chapter, the capital budgeting and the choosing the best options, which option has to be chosen for the investment? IRR is the most appropriate method, is being followed across India, whether it is a private sector or the public sector. Only one method that is practically following is NPV and IRR method. Other methods are, it is a method, but most of the organization, they are using IRR, right? Simply I'm telling here, if the IRR is more than your, there is cost of capital. Cost of capital means the cost you must to pay to others. You must pay to others. Okay. 12% IRR, 10% you have to give to the bank, then 2%. It is okay. If some cases the IRR and the cost of capital may be the equal, 10%, 10%. In that case, the government has they go for the sensitivity analysis. They should not think about it. IRR is same. IRR and this one, the cost of capital is same. In that case, the public sector companies, we go for the sensitivity analysis. We go the different parameters at the 80% variable cost and 100% fixed cost. Different parameters, different sections we are deploying, we are applying so many tools, whether in that also, whether the project is viable or not, whether to take up or not. To choose that alternative, we are examining different techniques, right? Different alternatives. This is what about the NPV. You are very clear. That is, future cash flows are discounted on date. Okay, after 1 year or 2 year or 3 year, you are going to get this revenue. Today you have spent 1 lakh rupees. So every year you're getting 40,000, 40,000, 40,000, 40,000 like this. So what you have to think of the time value of money. After 1 year, it is 40,000. What is the value today? After 2 years, it is 50,000. What is the value today? So you have to discount with the cost of capital or IRR. Where the NPV is 0, then if you are discounting on the IRR rate, the NPV is 0. Okay, then it is fine. If the NPV is positive, you can take up the project, right? NPV, when the NPV is positive, so cost of capital is lesser than the IRR. In that case, NPV is positive. Simple, very, very simple. Okay. Okay, you supposed to pay, that is 10 rupees, your earnings is 12 rupees, it is safe, you can go. You have to pay 12 rupees, but your earnings is only 10 rupees. IRR is only 10. You cannot pay off your debt. So please do understand, my dear friends. So such a way, you have to involve yourself. Please do involve yourself in these topics, because this is, if you thorough this, there is a evaluating the proposals, the evaluating the financial investment, definitely you will get a very good job. So the financial consultants are doing these jobs. You can start your own consultancy and so. Now this is very, very financial consultants. They are starting their own firms. They are doing this business. Okay. So what is next? A profitability index. Simply they are discounting there is a future cash flows. Has to be divided by the initial outlay. You will get this profitability index. Then payback period. Today you have invested the 1 lakh rupees. How many years? What is the time duration it is taken? What is the time duration it is taken to recover your initial investment? Whether it is a short payback period, there are 3 options. One option, it is giving your money back within 3 years. Another option, it is giving your money back 5 years. Another one, it is giving more than 5 years, right? So which one you choose? The shortest payback period. The option, the proposal, the investment alternative, which gives the shorter payback period, which has to be considered. Discounted payback period. In this discounted, we are discounting the cash flows, almost is same like payback only. But here, what we are doing, we are discounting here. There is almost same with the payback period, right? Then comes, so investment decision is over. You have chosen the right investment. You are going to invest because you have done analysis, you have evaluated everything, right? Please do understand what is the requirement you have identified, what is the requirement, where you are going to invest you have. Next comes how and where from you are going to raise the finance. What are the options available to you for raising the finance? What where you are going to mobilize, that is procurement of funds, right? There are two classifications are there. External, there is sources of funds. Another one is internal sources of funds, right? External, here I'm talking about the public sector, the share capital and debt capital. In there is a private sector, in private companies, they cannot issue the share capital. Please keep it in mind. They don't have such power given by the Companies Act 2013 or before at any act. There is Companies Act 1956. The private companies, they cannot issue share capital, right? So only public companies and public sector companies are authorized to issue the share capital. What is share capital? You are raising the fund from the public by way of equity shares or the preference shares. Okay. So all the equity shareholders are the owners of the company. You are giving the money. On your money, after collecting the money, I am investing in an asset and I am generating the revenue and giving to you. You are the owners. I am the representative. I am the board of director. I am the CMD. I am the representative of the shareholder. Please keep it in mind. All the board of directors are the representatives of the shareholders. They are being elected in the shareholders meeting, right? Okay. Now we are talking about the sources of funds, external sources. One is share capital. Please, we are taking money from the public. The second one is borrowed capital or debt capital. Either if the two ways we are collect the money from the public, one is we can issue equity shares. Once you are issuing the equity shares, they are becoming the owner of the company. If there is a profit, they will get. If there is a capital appreciation, they will get, they will enjoy. If there is a loss, they have to suffer. But in case of the debt capital, I can collect money from the same public by way of debentures or bonds also. In debentures and bonds, I am collecting the fund from the public only, but I am assuring them 10% debentures, 7% bonds. Why it is carrying the percentage? 10% debentures means the company is bound to pay 10% of interest to the debenture holders. It is immaterial whether the company is earning a profit or not. It is irrelevant. The debenture holders or the bond holders, they are entitled to get their interest irrespective of whether the company is earning a profit or loss. It is no matter at all. Okay, the company, whether it is earning a profit or loss, they are supposed to pay the interest and they are supposed to repay the principal amount also. Okay, so 5 years bond, 7 years bond, 8 years bonds, it is common nowadays, right? Now comes the share capital, and there is a debt capital. Debt capital, you can borrow the long-term loans from the banks also. These are the things. Then what is internal source of funds? What is retained earnings? So after generation of after generating this revenue, so either it will be utilized for the further reinvestment, or it will be distributed or dividend to the owners of the company. Owners means shareholders. So if that retained earnings, these undistributed profits can be utilized in public sector, it can be utilized for the reinvestment, for the expansion of the business, for acquisition of the new businesses, for takeovers, for there is absorptions. So many things we can use of these retained earnings, right? So this is a small thing about there is what are the ways we are raising the fund, right? So what are there is a plus and minus. We are going to compare these two things because you people should know which one is having the much weightage with respect to the equity financing. My dear friends, you are becoming the owner of the company, right? It is a permanent capital. You are going to become the owners of the company. You are entitled for the voting rights. Equity holders are having the voting rights. You have the guts, you have the powers to select the board of directors who has to represent for my behalf. That is, you are selecting the board of directors. So this is the equity financing will create added value to the company, the value to the firm. So it increases the market price of the shares. Okay, then entitled for dividends. So in case of it is not the power, you are entitled for dividends. Means if there is a profit generated from the business, that is only the equity shareholders are taking the high profits. Only debenture holders are loan, it is fixed percentage. Percentage is very fixed. The company is earning tons of rupees, crores of rupees. In that case, I am going to pay only this amount of interest to you. It is irrelevant how much I have that is earned from the business. It is purely for the equity shareholders. Keep it in mind. My dear friends, equity shareholders, they are taking high risk. They are putting their money. So return also high return and high risk. In equity shareholding, there is a high amount of risk involved. Simultaneously, there is a high risk also, right? The cost of shares are high compared to there is a cost of this. This is the demerit of this is the one or two or three things. Reduces the earnings per share, reduces the ownership. When it is reduces the ownership, dilution of the ownership. If I am issuing the shares for raising the funds, already I have, there is a set of capital. I go for further capital. If my shareholding, there is a holding will come down, there may be a chances, please do understand, there may be a chances for dilution of the ownership in case of equity financing. Someone will take more shares and more shares, keep on, there is accumulating the shares of the company, they will have the majority interest of the company. So there is a question mark for the ownership, right? But in the case of, let us come to this one, debt financing. So interest and what is the demerits? Whether you earn, whether you earn or not, you supposed to repay the interest. There is always a financial risk also. There is always the financial risk. There is a large amount of cash outflow will go when after a certain debt is over. So here you have to repay the amount. There is a redemption of debentures. A redemption of after 7 years or 8 years bond, you have to repay with the interest. So in that case, at the time of redemption of debentures, at the time of repayment of the bonds, there is a large flow of, there is a funds from the company. There is a big, the chances of lowering the cash in hand, right? There is a cash will come down. There is a big fall of the cash, right? But there is an interest tax shield. Okay, what is interest tax shield? It is a tax benefits being utilized by the public sector companies. All the companies, whether it is a private sector or public sector, they can have one benefit of this debt financing, because they can show that there is an interest in their profit and loss account as a expenditure. Please do understand what is the tax benefit they are availing, because they are showing the interest as a expenditure over there, right? Because it is a expenditure only, that is the interest paid on the loan, right? Then automatically the profit, net profit come down, because we are showing extra, that is expenditure in the profit and loss account. What is the ultimately there is an impact on the profit will come down. So automatically your tax, that is portion, if you supposed to pay 100 rupees, because of the interest, the net profit come to, that is 80 rupees only. Now you have to pay the corporate tax only on the EBI, there is a EBIT, that is what we call it as net profit, 80 rupees only. That is a saving. That is what we call it a tax benefit. No dilution. There is no question of ownership over here. There is no dilution in control. Increase in UPS. So when we go further in capital mix, how should be the capital structure? What should be the right mix? What is the optimum, that is capital mix, will yield high earnings per share? We are going to see one by one, right? Then comes, this should be the way, the equities, and there should be a optimum levered form. What is levered form? What is unlevered form? So leverage, there should be a leverage. What is leverage here? If the use of fund, the use of debt, how much it is changing the EPS, that has to be analyzed. So whether is there any impact on the total value of the firm after deploying the debt instruments, after deploying the debt instrument in your business, what is the final outcome? Whether it will increase your value of the firm as a whole, or it will decrease the market shares. So that has to be analyzed, right? We are going to so fundamental principles to design the capital structure here, the financial leverage, that is what we call the trading on equity. How much the use of funds, that is the use of that is debt fund, how it will impact on the changes in earning per share. Please do understand what is earning per share. I have the profit of there is 10 lakhs. I have, for example, I have the profit of 10 lakhs, right? The shareholders, there are 10,000 shareholders are there. Okay. Now 10,000 shareholders, they will get how many shares? 10,000 shares are there. So the total profit after tax divided by the number of shares, we get the earnings per share. For a single share, what is the revenue? So if you are using the borrowed capital in your the capital mix, the source of fund, what is the impact on the earnings per share? That has to be considered. So while considering the design of the capital mix, we have to consider the stability of sales. If the sales are stable, in this case, the banks are ready to give more, there is more loans, right? So the banks will have some eligibility criteria. They do have some criteria are awarding the loans. If your business is performing in such a way, you do have the right, there is stable growth and stability of the income. In that case, they will rate you as, they do have some stars, 5-star, 4-star, 3-star. This is what credit rating. The firm is having the more rare, that is stars, they will have very good borrowing capacity. So another thing, the mix should minimize the cost and maximize the EPS. In such a way, the capital structure has to be formed in such a way, it has to minimize the cost of capital. I am deploying the debt of 8%, the overall weighted average cost of capital should come down and maximize the EPS. So we have to analyze various cases, then only we come to know whether that a particular, the proposal, particular the mixer will give good or not, right? Ensure the existing manager control and the ownership dilution. It is talking about the dilution I told already. In case of equity financing, this is the major drawback. If you issue shares further and further, there is a chances of diluting. Your ownership will go to some other one. It happens, it may happen. So it is best to go with the debt financing, right? So risk associated with the business. Always we have to think about we have to foresee the risk. Forecasting is very, very important, because if you start the business, you're supposed to submit all the predictions only with the bank. For borrowing the loan, for starting the startup also, for starting the business, what is required? You have to make the projected balance sheet. You have to make all projections. Projections only will give. If you are projecting in a right way, it is good. So always risk also, you have to, some amount of risk also you have to consider, right? Then what should be the optimal? When the capital mix is said to be the optimum, I'm asking you, when I'm fixing, so I need, there is 10,000 crores, I need 10,000 crores, I go, there is 4,000 crores from equity shares and 6,000 crores from debt. I am just finalizing this. So when this decision is said to be optimum, when it increases the value of the firm, if that mix increases the value of the firm, the shareholders' wealth, the maximizing the total, there is a market value of the company, the total market capitalization is there is high. In that case, the mix is okay. Ultimately increases the shareholders' wealth, growth in the long run. In these cases, we can say that particular mix, what we have adopted, is very, very optimum, because it is yielding their right, the growth, everything. We go for the practical example. I'm just presenting you 4 options. 4 options we can. In the first option, we need, how much we need? We need 5 lakhs rupees, right? So we go for the issuing the first option. We go for, see, 5 lakhs rupees, we go for only equity share capital. So there is no preference share capital, there is no debentures at all. The total fund is purely made up of equity share capital only. There is no risk at all. There is no repayment of interest. There is no preference dividend at all. So directly you have to pay how much tax you have to pay? 30% corporate tax, right? There is earning before tax is 1,50,000, right? Right. For example, you take 1,50,000 is the earnings before tax, right? You're supposed to pay the tax on it, 30%, 45,000. The profits available for the equity shareholders is 1,05,000. The earnings per share is 21. How I arrive? There is 5,000 equity shares at the head of 5,000 equity shares at the rate of 100 rupees each. So 1,05,000 divided by 5,000 shares, earning per share is rupees 21, right? It is as per the one option. Now I'm changing the structure. I'm just changing the capital mix. I go for, there is a 50-50 with equity capital and preference share capital, right? While talking about the preference share capital or the priority, the privilege is given rather than the equity shareholders in repayment of the capital as well as the dividend for the preference shareholder. There are so many things, different types of preference shareholders are there. You might have studied in BCom, right? So the cumulative and non-cumulative. If it is a cumulative, if there is no profit in a particular year, in a particular accounting period, there is no profit. So the company will give when they arise, the profit arises. After 3 years, there is a profit. Definitely for the 3 years, it will give cumulatively. In non-cumulative, the preference shareholders get the dividend when there is a profit in the business. If the business earning the profit, then they will pay, there is a preference dividend. If they don't, there is a earn profit, they don't pay any preference. It is in the case of non-cumulative. There are so many types are there for the preference share capital. Here, it's supposed to pay. It is the preference supposed to pay the preference dividend here. Here 30,000. Total profits for equity shareholders is 75,000. So earnings per share in the second option is, I'm making only the equity share capital and equity share capital. I'm not introducing the debt. Come to the third one, option 3. See, equity share capital 2,50,000. Preference share capital 1,25,000. 10% debentures 1,25,000. Now I'm borrowing 1,25,000 from the bank, so from the public as debentures, right? So here it is very clear the company is paying, whether it is earning a profit or not, it has to pay the 10% interest, because debenture holders are giving the priority. Even in the case of winding up, even in the case of liquidation, the priority is given to the debt holders, debenture holders, the loans. They are the priority settlement holders, right? Now the interest 12,500 I am deducting. Now I am getting how much there is earnings before tax. How much? 1,37,500. Now the tax is 41,250, because you comparatively see, if there is no debt, I have to pay 45,000 as taxes. Please see here in tax row, you see here, without deploying a debt, I have to pay more taxes, 45,000. Once I started deploying the debt, automatically the tax amount will come down. See, so 41,250 rupees. Simultaneously, the next option also, it comes to 37,500, right? So then you have to deduct the preference dividend, because there are preference shareholders also there. 1,250 preference shareholders are there. Now comes EPS is changing. Introduction of 1,25,000 debt ultimately impact on the earning per share. Earning per share, it is purely to the shareholders. If the earnings per share is increasing, it is noteworthy. The shareholders wealth is maximizing. Okay, you may ask some question here, sir, at what point, at to some extent we can, there is a go for debt. After some maximum extent, there is a fall. That also you have to keep it in mind. So if you put 100% there is debt only, that is always risky. Because if it is earning the good, if the company is good, okay, it is the repaying capacity is there. So it is repaying the interest, repaying the principal, it is fine. But in unforeseen circumstances like the COVID-19, the pandemic, what is prevailing last 4 months here, the entire industry, they do have the capital assets with them. But they could not produce last 4 months. There is a big discussion is going on whether the last 3 months from the April to June, whether the capital asset has to be depreciated or not. But accounting standard is telling whether once you put to use, it has to be depreciated. But it is in idle condition. Last 3 months, there is no manufacture, no production at all. So you think about also. So please, you just to apply so many things. This is what we call it as EBIT and EPS analysis. So most of the MCOM students and MBA students, you might know, you might have crossed this, that is EBIT and EPS analysis. I hope you do understand, right? I go to the next one. We have come to the third decision here. First one is over. Okay, now we are earning the profits, right? Strategy is whether to keep the profit, whether to distribute. What can we do with the profits? Since the public company doesn't have any profit motive at all, right? So the first question, whether the profit retained with the company, yes. If it is yes, okay. Should the profit be financed for the reinvestment? So whatever the profit we have earned, whether it can be utilized for the reinvestment, for the new proposals, for the new expenses, for the new acquisition of the new businesses, for the forward integration, for the backward integrations. So many corporate strategies also there for the takeovers. So it can be utilized. Whether any dividend be paid. So this is another big strategy. You have earned this much. There are some companies are there. They are very familiar for the dividend paying companies. The name itself, you can learn very, very important thing is the cash flow statement. Why I am giving the cash flow statement? So here in balance sheet, so some provisions are you are taking. So some foreseeable the liabilities, whether it has to be paid or not. So many things, the provisions we are taking. That is not depicting the picture of the firm, but cash flow. While we talking about this cash flow, it is original. What is the flows from the operating? What is the finance, the cash flows from the finance activity? It is very, very, very clear. That is why the investors are very keen on looking at the cash flows of the business, right? Okay, so now you are clear. Interim dividend, anytime during this year, the board of directors, without the consent of the shareholders also, they can declare in the board meeting, right? But final dividend has to be taken. The decision has to be taken in the annual general body meeting of the shareholders after, that is, closing of all the accounts, after presentation of the financial statements of the particular year. It is over, right? So the final the dividend strategy also over. Now we have seen what is where to invest, that is investment decision we have seen. Then what type of sources of funds we have to collect, where to collect, and what is the good way of collecting, what is the good way of mixing, what we see. The third one is, that is profit strategy, that is how the profit is to be distributed among the shareholders, right? I don't know. So the commerce students, you might across this dividend the distribution. So in company accounts, you have seen there is internal reconstruction. I think so. In my college day, just I do remember my college days. So my professor used to teach me what is internal reconstruction, external reconstruction. In that day, I could not. There is what is actually this internal reconstruction, the external reconstruction. But when I am in the company, I realize what my professor told that day. That is very 25, 22, 23 years back, right? So that was a very wonderful thing. Now I'm experiencing that is directly what is practically it is happening in the companies and industries, right? That is why I'm sharing with you all, right? Then comes a very, very important thing. Without this, you cannot grow the company. Okay, I already told you have the asset, you have the company, you have the big plant, you have the factory, everything is there. So you don't have you don't have the money to pay the wages, you don't have to meet out the electricity, you don't have the money to pay the telephone bills. These are the indirect expenses, direct expenses. These definitely you have to invest in the current assets. So you people, there is a commerce students, they know what is working capital. Simply you people say it is current assets minus current liability, sir. Simple, very simple, sir. It is current asset minus current liability. When what is the working capital ratio? We say current ratio, sir. When the current ratio is 2:1, it is idle. Then what is current asset? What is current liability? What is current assets means? It is the amount it is going to be, that is realized within a short span, say 1 year. It is going to be realized. It is going to be, that is realized, easily liquidated. Easily you can make it converted into cash. This is what we call it as current assets. So you have, that is 2 lakh rupees current assets. You have to pay some, that is creditors also, your suppliers also. So you have bought goods on credit purchase. You have to pay for them. So 1 lakh rupees. If the current assets is 2 lakhs, the current liability, the payability is less than that, it is okay. Then another thing, quick ratio is also there. Very, very highly liquid. Cash and marketable securities, or what we call it as quick assets. Today, I need money today. I can easily, within a very, very short span, you can convert into cash, right? That is what we call it as quick assets or liquid assets, right? So what is quick ratio? What should be the quick ratio? Should be 1:1. So quick ratio is, for setting of the liability, should have some amount. For setting up the liability, you should have the amount. That is why what we call it as quick ratio. You might have studied in management accounting what is that is net working capital, what is gross working capital, right? Gross working capital is total of the current assets. Net working capital means the difference between the total current assets minus liabilities. It is what we call it as net working capital, right? So it is very brief on the working capital. So for that also you have to decide. For that also you have to decide, right? So what is the cycle here? So we are procuring the raw materials from the creditors on the there is a credit basis, right? So the raw materials will be there in the godown, or for say for example 1 month, right? Then it will be it takes nearly 15 days for production. It will be converted into the finished goods. Then we are selling to the debtors. We cannot directly, we are taking the cash purchase, cash sales. We have to extend our customers the credit facility also. So we are extending 30 days, for example, 1 month. So this cycle, then after 1 month, they will give the payment. Then we have to, then only we have to pay to the creditors. It is a big cycle. So we cannot wait for the debtors, for our customers to pay. Then only we pay to our suppliers. We cannot pay because our suppliers have extended only there is 2 weeks or 4 weeks of time. So for meeting up this expenditure, I have to, anyway, I should not wait for 120 days. After 90 days only, I will get the amount from the debtors, but is the customers. I cannot wait for that big period. So for that, I need some amount to tackle that situation. I have to pay. At any cost, I have to pay. So I need money. So I go for the short term, that is loan. I go for something. So I have to manage the things. That is what we call it as working capital. It is the money, it is the amount what you are needed to tackle the day-to-day expenses. Simply what we are calling working capital is to run the business smoothly. To run the business smoothly, it is required. My dear friends, we go to the next one. treasury management, right? How to manage the surplus funds, right? So sometimes in the government sector, so in private sector, okay, there is a crunch, there is a crisis of the cash, there is a crisis of the working capital. But you say you go and take the annual reports of a very big company. There is a Indian Oil Corporation, IOC, yes, Coal India Limited, NTPC. You go to their website and you see what is the cash balance they do have. You get surprised. They do have the large amount of surplus cash, because this is the government money government is having. They are giving very good salary for the people. They are giving very good amenities. So every time they do have, there is cash, very big amount of cash is there with the public sector. You go and check it out. In Coal India, we have very big amount of cash. Cash is very big. Most of the public sector companies, top 10 public sector companies, you go and analyze in the balance sheet, definitely you will get surprised that they do have such a big cash. Okay, sir. If you have over, there is cash, that also very dangerous, sir, right? I do agree with you. You should not be deficit, you should not be a surplus. Sometimes the surplus money can be invested in some other manner so that we can get some more than the cost of capital. You can invest. That is the better investment in some investment. The business homes, they are selecting some businesses, they are investing on them for higher returns. If they do have the surplus funds, they look for the very good investment options. I'm concerning about the securities. Some companies, they go for the mutual funds. Some companies, they go for some other acquiring the shares of the another companies, having the control of the another companies. So there are so many investment options. This is what we call it as how effectively you are utilizing the surplus fund. What we call it as treasury management. So that type of decisions also you have to think over that. Next comes, I'm coming to the last, I think so, last decision in respect of the cash management. So if you are the company, if you are running the college also, the administrative department, they know how to manage the cash, because every month you have some remittances, you have some cash inflows, you have some cash outflows also. So cash budget has to be prepared. Again, I'm coming to my students, commerce students. So in management accounting, it will help you. What is there is cash budget, right? Cash budget. Another thing, what are the tax remittances? It is a statutory compliances. So you cannot postpone the payments. If you can postpone there is a salary of the employees also, right? But you cannot postpone the statutory remittances like GST, income taxes. At the particular point of time, you supposed to remit those things. So accordingly, what are all the receipts, what are the payments that has to be projected, and accordingly you keep the cash flows and outflows. This is what all there is a cash management about. So in the very short, because there are so many things to discuss with you all friends, it is not a very small topic. If I go into the cash management, it takes another 3 hours. If you go into the treasury management, I can speak 3 hours. So every field, finance is the blood of the business. Please do. You certainly, you commerce students are certainly, you are fortunate enough where you are studying the commerce course. So you are very lucky, you are studying the business. So even engineering guys, they don't know what is cash management, what is treasury management. You ask what is working capital, they don't know. So the God gave you such a wonderful opportunity to study the commerce. My dear students, you have chosen such a wonderful course, that is commerce course. There are ample of opportunities. Don't think about the current scenario. In current scenario is very temporary. Okay, this economic slowdown, recession due to the COVID-19 pandemic, it is very, very temporary, right? So you keep working hard and you focus on the studies, definitely. So you have to just I'm adding some values. Almost I'm completing my presentation. This is the concluding remarks what I am giving before concluding this session. I want to share my thoughts to my beloved friends, the students, right? Okay. So only one life given by the God. So whatever you can do, so please do whatever you wish. You read as much as far as you can. You do it. You doing whatever the things your mind is saying, right? So positively, always you think positively. Don't think about this COVID-19, this corona all about. It is very, very temporary only. It will be all right after 2 or 3 months, right? Okay, my dear friends, please, I'm concluding my presentation with another quotation of my, there is a guru of every business, the guru of business, Indian business. He is rendering such a wonderful services to the entire, there is a Indian industry fraternity. So entire government is applauding him. He is extended so much of help that is towards corporate social responsibility. The Ratan Tata has rendered for the last nearly 50 years, he has been rendered so much of services in all, there is a different platforms to the public of India, right? So I'm quoting his quote. There is very good quote by Mr. Ratan Tata. I don't believe in taking a right decision. Again, I'm repeating. I don't believe in taking a right decision. I take decision and make them correct. Those who are your creative thinkers, you take a decision and you make a strategy how to make them right. So Aditya Birla in his interview, Kumaramangalam Birla. So one interviewer is asking, one journalist is asking him about what are the business it is going to flourish in the future. He told very boldly, in the next, within a decade, the water business, it is going to be a big thing. Next 10 years, he is forecasting. See how professional they are, how expert they are. So students, my request is always you go with the positive thinking, positive aspects. You do, this is the life given by the God, extremely fortunately, you are with the parents. The parents are giving all the facilities. They are facilitating all the help. You are doing, there is a commerce course in a wonderful college, the Idhaya College for Women. So I am also a commerce student. So I am here because of my teachers from the ABC College, Mailadurai. So whenever I give my speech, I'm saluting my teachers. Because of my teachers only, I am in this position. I can share my knowledge to you all students, right? So I respect my teachers always. Whenever I wake up in the morning, I'm thinking of my teachers. My teachers used to say so many things for the upliftment of my life. Today I'm in a very good position because of my teachers. So please, my another request also, please respect your teachers. The teacher is a very noble profession. They are rendering such a wonderful service. It is not about the money. They are preparing for you. They are delivering for you. They are trying to make you understand in all the way. They are putting their own strategy for making you understand. The teachers are fantastic. So with this words, I'm concluding my speech. Thank you, Principal Madam, for extending this wonderful opportunity. Thanks for the invitation to be a part of this seminar. Thank you, Mahalakshmi Madam. Thank you, all the participants. Without you all, so this function could not become a grand success. I hope you all enjoyed my session. So, sorry for the interruptions. I don't know, in Bhubaneswar, continuously there is no power cut in Bhubaneswar. Yesterday there was a huge rain. Because of that, So today there is a complete power cut. I do have the UPS to some amount only, so I could use that UPS also. So okay, so whatever the God is giving us, it is good for only. Okay, so in such a way you take it as, so I am audible to you also. So my room is not bright because no power also. Okay, so thank you Principal Madam, thank you HOD Madam, and thank you all my professors at this occasion, all my professors and all my friends, all my students. Thank you once again. Just I wind up my session. Thank you.
Thank you very much, sir, for your elaborative and enlightenment session. Now we are having some questions raised by our active participants. Shall I ask,
Yes,
sir?
yes, yes, madam. Actually,
How to
yes, ma'am. Yes, ma'am. Actually, there is a continuously power fluctuations are there in Bhubaneswar, I think so, right from yesterday. So it may be interruption has been happened because of that only, I hope. So I hope the people, the people are not getting disturbed from my speech, right?
okay, no problem, sir. How to recover the financial crisis in public sector in India?
How to?
How to recover the financial crisis in public sectors in India?
How to recoup?
How to recover? How to
Recover
recover the
financial
financial
crisis
crisis in public
public
sectors in
sector
India?
in India. So the government is taking all the there is steps. So financial crisis, if you take the top, there are so many, there is companies comes under, there is public sector. Okay, there are purely 100% government companies also there, public sector also there, corporations are there. What is corporations? The corporation separate act has been passed in the parliament. Say for example, what is LIC is the corporation, because separate act has been passed in the parliament. It is under the separate statute. Here the financial crisis, most of the top level, they don't have the financial crisis, first thing. But the problem is here, the crisis what we are using here, because of these 4 months, they do have the problems in realizing the receivables. They have rendered so many services, but they could not get the amount in time. So there is a big the problem of the working capital. The financial crisis, I'm talking about the working capital, because of the lack of receivables, the trade receivables or the debtors are not able to pay. There is the payments. Now there is to some extent the public sector not full, because we are always in a safe mode. Only while we talking about the public sector, there are sick companies also there. Top level companies also there. There is a balancing, because the government is looking at all the regions, whether it is sick or not. They have to develop the chemical fertilizers also. They are developing the coal sector also. They are developing the welfare also. The different sectors are there. In some sector, there is a financial crisis. The government will the balance from the surplus amount, they will be diverted to that type of sick units. But they will not shut down. There are different industries are there. Forest and welfare, tourism. There is a hotel industry, the tourism sector. It is highly, it has the huge impact on this one. There is COVID-19. The tourism industry has been spoiled like anything. And there is hotel industry.
Thank you, sir. The next question is, when the company consider issuing debt instead of equity?
Yes,
when the company consider issuing debt instead of equity?
Yes, of course, ma'am, to a certain extent. So there are so many tools. So if the borrowing capacity is there, see, the borrowing capacity is there, definitely you can go for the debt. The problem, the question mark is here, whether you do have the borrowing capacity. They all the in public sector is concerned, we don't have any problem, ma'am, because public sector banks are there. They're lending so much of loans, because now, so the risk is too much lesser than the private. The State Bank of India, so much, there is nationalized banks are there is a lending, there are nearly 60 to 70% loans to the public sector only, because they are safe. There will not be any overdues. There will not be any non-performing assets. If there is lending to the private sector, the question of repayment arises. But here, in some extent, government will undertake and they will pay off the debts of the public sector. So, I think there is a issue of debt is always, there should be a balance. I told you that there is a mixer should be the equity. If it is fully equity, only you can expect the capital appreciation, right? If it is a debt, automatically, so you have to pay only a certain portion to the debt holders, and the remaining you can keep. That is why I'm telling you can put the debt also in your capital, so that you can increase the shareholders' wealth. Okay, ma'am? Right.
Thank you, sir. From the pandemic period, how will run successful business in India?
So it is the big question here. The pandemic, it has created such a crisis because the cine industry has been in problem. So the films has not been released. They are directly releasing on the Amazon platform. They are releasing directly on the originals. So they are incurring so much of losses. Okay. So here at this stage we cannot say. So at this pandemic situation, pharma industry is growing like anything. See, this is one thing I can say. The pharma industry is growing like anything. So investors are showing much interest on the pharmaceutical industries. Okay, so agriculture is concerned, there is no impact on this COVID-19. It is as per the report. So there is no huge impact on the agriculture. To some extent, the new business opportunities will come, but the entrepreneurs, they are suffering a lot. Those who are started their startup during the March last week, they will be facing, because they have to pay. They have started the business. See, they have started the business in the mid of March. So they have not started the trading operations. So the fixed cost remains same. They have to pay the room rent, that is the shop rent. They have not started the trading at all. There is a huge risk for the new startups, those who are started in, that is March, because there is a big risk. Now we cannot apply there is a SWOT analysis here. There is a strength opportunities, because in the forecast, we cannot even forecast the lockdown will go to what extent we go, we don't know. But we hope that within a couple of months, the situation will be all right.
Thank you, sir. The next question is, can bank credit influence corporate working capital?
Yes, certainly, ma'am. Certainly, for the working capital, the bank credit is, they are rendering the bank overdraft, trade credit. This is the one type of the working capital, right, ma'am? So that is why I'm telling. So we cannot wait for your customer to pay to you and you pay to your supplier. In between, you need your money. So in a working capital cycle, if you go for the operating cycle, so in between you need a finance. So it can be met by trade credits and the bank credit also, right?
Thank you, sir. In the present situation, most of the people invest in gold. How the corporate sector attract the investors?
Yes, ma'am. I don't think it is going good only. Corporates are doing very, very wonderful nowadays, because the people are started investing because they are in home. They sit in home, they do analyze, they do all the analysis, which company they have to invest. They do all the analysis, they are investing now. So with respect to share market, it is in lower only. So it will bounce back. So we are expecting there is so many good sector. See here, there are so many points. BSC or Sensex points and Nifty points are going down, but Coal India Limited is going 6%, 7%. It is based on the projects. See here, power sector, NTPC, ONGC, IOC. These are all the very good scripts. It is going good, they are doing good services, all the essential services. If you take the NTPC, power sector, all, or power grid corporation, there is oil sector, ONGC, Indian Oil Corporation, these sectors, you can put your money over there. You can blindly, you can put money, because definitely it is a dividend yielding company. They are paying, so it is good. So public sector is concerned, it is good.
Thank you, sir.
But you have
Nowadays,
to, it is my humble request for the investors, you don't blindly go and invest in the share market. So before you do that, you please analyze, you just get some knowledge over that. Because the people, they rush to the share market, they put their valuable money, the very hard-earned money, they simply putting on the intraday. Please, my dear friends, you students, don't do intraday trading. I know the people, many people, they stuck in the intraday trading. They have to sell their assets also to set off. Okay, so intraday trading, if you are good at trading, then you do. If you are the new beginners, you please watch at least 3 to 4 months the share market thoroughly, then only you start. The people, what they are doing, simply they go and invest the next day only. So I got a PAN card, sir, I got the account, sir, only 3 in an account, just I'm going directly, I'm having the 1 lakh rupees or 2 lakhs rupees, they are damnly, they are blindly, they are going to intraday trading. Please, in stock market, don't believe the agents, don't believe your stockbroker. You please do analyze, you do apply your mind, it only matters, please. Okay. Yes, madam.
thank you, sir. The next one is, nowadays, what type of investment is the best one? Can you suggest?
What type of
Investment is the best one. Can you suggest?
ma'am? Can you loud, ma'am, please?
Okay, sir. Okay, sir. I will tell you, sir. Nowadays,
Hello?
what type of investment is the best one? Can you suggest?
Informations. What they're asking for?
Investment, sir. Nowadays, what
Ah,
type of investment
yes,
is
yes,
the
yes,
best
yes.
one?
Okay. So from my opinion, okay, from my
Yes.
opinion, the gold is the right investment. If you have a surplus amount, you please invest on the gold. Gold is going like anything now. So gold is the right investment. Even you are doing in the commodity market also. If you are doing commodity, you please buy a gold or silver. Silver and gold, it is going to be a very thing. So if you fix there is a return 10% or 15%. You fix the return, mentally you prepare which return, how much return you want from your the money. You have, there is 10 lakhs rupees. How much money you expect from your money? Don't be greed. Okay, if you are greed, definitely you just fix that amount. So you accordingly you make the portfolio. Don't put all the amount in a single thing. You make your own portfolio. You basket of different stocks, very good stocks. You only 10% of the stocks, 10% of stocks. Just you invest in different sectors, not in one sector. You go for the oil sector. You go for the renewable sector. You go 10%, 10%. I have 20 lakhs. 10%, 2 lakhs. I go for there is a the energy sector. I go for power sector. This type of differentiating portfolio only matters when we talk about the investment. If it is a right portfolio you made, you close your eyes and you stay for 10 years, automatically it will give more return. Don't expect return within a day or within a way. So if you want return, you wait for at least 10 years. You put amount in very good scripts. You don't follow, don't look at what is the status every day. At least 10 years or 10 times. If it becomes 10 times, you get back the money and come out of the stock market. But patience is very, very important as far as the market is concerned. But you ask me which investment, I suggest you can go silver or gold. That is a very good option. At this pandemic situation, at this scenario, I can say this is the safe investment. You can go either gold or silver.
Thank you, sir. The last one. Why the central government to acquire the state cooperative bank under the control of RBI? Shall I repeat again, sir? Why the central government to acquire the state cooperative bank under the control of RBI? Am I audible, sir?
Madam, make it louder, madam. I could not listen you properly.
Why?
So, cooperative
Why
bank.
the central? Okay, sir.
Why the central
government to acquire the state cooperative bank under the control of RBI?
So why the central government put a cooperative banks under the control of RBI? Your question, right?
Yes, sir. Yes, sir. Yes, sir.
The cooperative banks. Okay, ma'am. This is I don't have the clarity on this. Why the cooperative banks are being under RBI Bank, Reserve Bank of India, right? This is a question, ma'am. Hello. I don't know what happened. Mahalakshmi ma'am. HOD madam. Can you hear me? Am I audible? Again, power has gone. It is a very pathetic situation prevailing here at Bhubaneswar. Madam? So I don't know what happened. I hope so I do have the separate YouTube channel. I'm just imparting education to my beloved rural students from the Tamil Nadu. That is why I'm giving some tips in my YouTube channel. Okay, my YouTube channel is CMA CS.SABAPATHI. Please check. You can have different materials with respective of basics of accounting. I'm giving some videos on that. It is only, so nothing is there. Only I am from very rural background. I am from the village. That is why I want to impart the good education to my all beloved students from the villages. I do have, if you have any queries, please write to me. You get the number from Mahalakshmi madam. I'm pleasure to give the guidance, right? I don't know. I could not see ma'am, Mahalakshmi ma'am. I don't know what happened to madam. So is there any other question? Please inbox me. So I'm always very pleasure to answer your questions. The last question was why the corporate banks are under there is RBI. So I will post this answer in my YouTube channel, right? Within 2 days, I will have a video on this. I will post on my video on my YouTube channel. All the students, I hope you have enjoyed my lecture or speech on this topic. I thank you one and all. I don't know, I could not see ma'am, any ma'am, Mahalakshmi ma'am or Sukanya ma'am. Are you there? So if you ask questions on tax planning also, so I'll be very happy to answer because I feel I'm having good at tax. So you text me if you respect of GST, most welcome. I'm answering good on GST and income tax also. I'm always ready to. Okay. So my favorite field is taxation. I'm always giving good. Hello, madam. I could not. I don't know whether HOD madam is there or not. I don't know. Please, anyone, please confirm.
Yes, sir. I am here only, sir.
Okay, ma'am. Shall we wind up, ma'am?
Yes, sir. Yes, sir.
Okay, ma'am. Any other question, ma'am? Very short span of time, ma'am. 1 hour, I think, I hope that I could give my best, ma'am. I hope
Yes,
you
sir.
all have enjoyed. Uh, so in some other occasion, ma'am, I will always ready to give such with respect to taxation, GST and all. So I'm in a financial control. I can give some tips to my beloved students because now I am from very rural background, man. I know the pain what they people are taking to understand what is the basics of accounting, what is the financial management, how to manage the things. Because they are. I'm just thinking 25 years back how I were, what I were. So that is why I'm extending some the videos in my channel also. I have created a YouTube channel only to impart education to the needy students from the rural background. Okay, ma'am. You can refer your students also. I'm always putting my basics of accounting. There are continuously I'm giving some tips in their language. I am informed that I should be the lecture should be in English. That is why 100% I made it in English. Otherwise, I can give lectures on Tamil also because now that is the I hope that that is the right medium. I take the concept very clear to the students. Okay,
Thank
ma'am.
you,
Shall
sir.
we come to the session, ma'am?
Yes, sir.
Conclude the
Yes,
session.
sir. Yes, sir. Yes, sir. Thank you very much for answering these questions raised by the participants, sir. And we are very eager to waiting for in the near future. Even the participants are giving their feedback as very informative session, very practical session, and they thank the organizers also, sir. Thank you very much, sir, for your enlightenment speech and everything, sir. Gratitude is the healthiest of all human emotions. The more you express gratitude for what you have, the more likely you have even more to express gratitude for. I request our department assistant professor Dr. D. Venkateshwari ma'am to propose the vote of thanks.
Good afternoon to all. It is my privilege to have been asked to propose a vote of thanks on this occasion. Gratitude is not only the greatest of virtues, but the parent of all others also. So, I deem it a great honor to propose the vote of thanks to all who have helped us in making this webinar such a resounding success. On behalf of our Idhaya Management and PG and Research Department of Commerce, Idhaya College for Women, Kumbakonam, I would like to express my heartfelt gratitude to CMA CS.SABAPATHI, Deputy Manager of Finance, Coal India Limited, Kolkata, for gracing this occasion as chief guest of today's webinar and sharing his precious knowledge and experience with us. Thank you, sir. Thank you very much. The way you explain the topic is very exemplary. You are making this webinar is very interesting and meaningful. I also wish to express my gratitude to yesterday's webinar chief guest, Professor Dr. M. Karthikeyan, College of Business and Economics, Olo University, Ethiopia, for his excellent presentation. We are grateful to our principal, Reverend Sister Dr. Eugene Amala, for her words of encouragement. Her able guidance has always encouraged us. I thank her for her kindness, her interest, and continued support. I would like to express our profound gratitude to our college secretary, vice principal, and administrator for providing encouragement and for their moral supports. I would like to thank our beloved HOD, Dr. V. Mahalakshmi, and all our department staff and lab technician who have made this webinar a grand success. I heartily congratulate all the participants of this webinar for their active participation. Once again, I thank you all for making this webinar successful with your contribution. Thank you, one and all. Keep distance, wear mask, wash hands with soap, be safe from coronavirus. Thank you.
Thank you, Venkateshwari ma'am. Productivity and efficiency can be achieved only step by step with sustained hard work, relentless attention to details, and insistence on the highest standards of quality and performance. I am glad to inform that 1,050 students, 1,050 participants are registered from Andhra Pradesh, Telangana, Kerala, Chhattisgarh, Haryana, Rajasthan, Maharashtra, Jharkhand, Bihar, West Bengal, Puducherry, Uttar Pradesh, Gujarat, and Malaysia. I hope you are all gained for this 2 days webinar on survey sustainable business strategies after COVID-19 and the financial strategies of public sectors. Thank you all for your continuous support and encouragement. Stay home, stay safe, stay healthy, and keep learning. Thank you. Thank you, everyone.